Welcome to Crypto Jargon, the series where I break down the complex terms used in the blockchain tech and crypto space. In this episode, we take a look at the following acronyms: Buy the dip, sell the peak, buy the rumor, sell the news, HODL, FODL, BIDL, and TOT. These are all related to trading or investing in cryptocurrencies, so you will definitely come across them in your research. So let's explain. This episode is sponsored by Ledger, the maker of the best hardware wallets on the market. To find out more about it, check out the description of the video where you will find the link and my tutorials on the Ledger Nano S and Ledger Nano X devices. So let's explain. Starting with BTD, which is an acronym standing for Buy the Dip. It could also be seen spelled as BTFD, which stands for Buy the Fucking Dip, and it is a call for action amongst traders. It is used when a coin has experienced a fall in its value, and in certain circumstances this is an opportunity to buy it low with the potential of selling it higher later and make a profit. This is also what the next acronym calls for: Buy the dip, sell the peak, or you can also see it as Buy the dip, sell the top. The top is the high price point, and the dip, of course, is the low price point. This is basically the core of trading. Buy low, sell high. Sounds easy, right? Well, you'd be surprised how many people get it wrong and end up selling lower than they bought. Which is why I'm releasing a course for beginners where I focus on how to avoid this. Watch out for it, it's coming soon, and I will drop the link in the description in this video, or you can find it on my website as well. Another very popular expression you will see on crypto forums and social media too is buy the rumor, sell the news. Meaning that one should buy a coin when there are rumors about an upcoming development, such as a new release of importance, a new wallet or exchange listing or protocol upgrade, and sell the coin when the news about it are posted in the mainstream, which usually causes a jump in its value. HODL and hodling is probably the most famous and exclusively crypto slang that made it to the mainstream. It literally means holding, in other words, not selling. In recent days, it has been appropriated as an acronym for hold on for dear life, but in fact it was born out of a simple mistake in 2013 when a user on Bitcoin Talk misspelled holding a few times during a drunken rant post about being a bad trader, and the term went viral. The post came at a time of a very bad Bitcoin crash from the then all-time high of nearly $1,200 all the way down to below 400 levels, a drop of more than 67%, and it was the only post that brought a bit of fun to the community during those dark days, so it comes as no surprise that it made an impact, and thus a new slang was born. Today we see it used pretty much everywhere, even making its way recently into the US Congress.
What we hear a lot of is people buying and holding. If you go onto the Twitter universe, you'll see a phrase HODL, which means hold on for dear life. And the thinking is that they buy it and hold it. In fact, I mentioned in my opening remarks my 30-year-old niece who bought Bitcoin years ago, and she's an HODL. She says, I'm going to own it. I don't know what's going to come of it, but I want to hang on to it.
Okay, on to the next one, FODL. This is not an actual term. It was used in a show called Fast Money on CNBC, where Bitcoin and other cryptocurrencies are often discussed as an attempted antonym to HODL. But it didn't catch on, so it never really made it into the crypto space. It basically means to sell rather than HODL. Another term that was born in response to HODL is BIDL, and this one has a little more weight to it since it was trademarked by Coinbase.com in 2018. It's a call to arms for building and contributing to the blockchain ecosystem instead of just passively holding. The BIDL movement believes that instead of just accumulating or trading cryptocurrencies, people should really start contributing proactively in order to help adoption and push crypto into the mainstream. And the last acronym in this episode is TOT, which stands for Think Long Term, an investment strategy where one is not looking for the quick profits in a short period of time, but is focused on a long-term investment horizon, which can be months or years. Since cryptocurrencies are still a very new asset class, many investors are thinking long-term and expect huge gains in 5 to 10 years time, although for many of the altcoins, this cannot be a very safe projection since they can have many hurdles along the way that can render them useless and respectively worthless. So, my personal strategy with the alts is to trade them rather than just hodl. However, Bitcoin is surely the one asset where you can apply the think long-term strategy. And this concludes today's episode. Make sure you check out the description below for links to the other episodes. Leave a like and a comment below and share this with anyone else who might benefit from watching it. Enjoying this content? Why not grab a copy of my book Crypto Jargon A to Z, the most thorough dictionary that exists to date with over 700 definitions of acronyms, trading slang and all the crypto terminology you need. Just go to ojjordan.com/cryptojargon and grab your digital copy today.